Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Essential Properties Realty Trust INC quarterly report. Essential Properties Realty Trust Inc. provides a range of businesses and services through its portfolio of single-tenant properties. These include restaurants, car washes, automotive services, medical and dental services, convenience stores, equipment rental, entertainment, early childhood education, grocery stores, health and fitness centers. The company leases these properties to middle-market companies on a long-term basis, allowing it to generate revenue through rent payments. The Essential Properties Realty Trust, Inc. EPRT stock price has remained relatively stable over the past year, experiencing only a 2.3% decline. However, this modest downturn can be attributed to several factors that have contributed to its overall performance. Despite reporting robust third-quarter results and surpassing analyst estimates for earnings per share and revenue, EPRT's stock price did not experience significant growth. The company's consistent dividend payments and growth, strategic investment and portfolio expansion, positive analyst sentiment, and solid financial position likely provided a floor for the stock price, preventing a more substantial decline. The key factors that have contributed to EPRT's stable performance include its strong earnings growth of 15.6%, exceeding the REIT's industry average, consistent dividend payments with an annual yield of approximately 3.8%, strategic investments in sale-leaseback transactions, and a solid financial position with substantial liquidity and managed leverage. Overall, while the stock price has not experienced significant growth, EPRT's positive operational and financial results have likely prevented a more drastic downturn, contributing to its stable performance over the past year. The primary drivers of revenue growth or decline are primarily influenced by three key factors: rental revenue, interest on loans and direct financing, lease receivables, and other revenue streams. Revenue growth is driven by the increase in rental revenue due to higher lease incentives, accretion of below-market lease intangibles, and amortization of above-market ground lease values. Additionally, interest on loans and direct financing lease receivables grows with an increase in mortgage loans receivable portfolio. Other revenue streams also contribute to growth through non-recurring lease termination fees. On the other hand, revenue decline is primarily caused by the termination of leases, resulting in a charge to rental revenue for unamortized lease incentives and intangibles. Furthermore, contingent rent from tenants decreases, leading to a decline in revenue. The company's financial performance indicates a strong ability to generate cash from its core business activities. With an operating cash flow of $1,234,119 in 2025, the company is able to cover its operational expenses and invest in growth initiatives. This positive trend suggests that the company's operations are profitable and efficient, allowing it to produce a significant amount of cash. The company's debt level and interest expenses have undergone significant changes over the past year. In terms of debt, the total debt has increased by approximately $613,000 from 2024 to 2025, with a notable increase in principal outstanding debt from $2.13 billion to $2.65 billion as of September 30, 2025. The company's debt level is expected to reach $2.225 billion by 2028. Regarding interest expenses, the company has seen a substantial increase, rising by 31.1% from 2024 to 2025, with an increase of $22.6 million in interest expense from $54.6 million in 2024 to $77.1 million in 2025. This significant rise in interest expenses is likely due to the increased debt level and higher interest rates. Overall, these changes indicate a notable shift in the company's financial position, with increasing debt levels and corresponding interest expenses. Management is executing on its strategy to drive growth through acquisitions and development activities, while focusing on delivering strong operating results. The company aims to maximize stockholder value by generating attractive risk-adjusted returns through owning, managing, and growing a diversified portfolio of commercially desirable properties. Key strategies include investing in long-term, net leases of freestanding, single-tenant properties focusing on relationship-based sourcing and investments in middle-market companies with stable operating histories, maintaining a prudent balance between debt and equity financing, managing risk through hedging strategies to mitigate interest rate fluctuations. Management expects to meet short-term liquidity requirements and has sufficient cash to fund operations for the foreseeable future. The company plans to lower its cost of funding and diversify debt capital through various sources. The company's financial summary reveals a commitment to shareholder value through dividend payments. In 2025, the company made significant investments in its shareholders by distributing $177,495,000 in total dividend payments. This demonstrates a clear focus on rewarding investors for their loyalty and trust in the company. That concludes the financial summary for Essential Properties Realty Trust Inc. Feel free to comment below, and I will be happy to answer them when possible.